In a nutshell, what does a bookkeeper do? They work all day long to make sure that the company's finances are in order by balancing budgets, recording transactions, analyzing cash flows. The accounting department also calculates some important metrics like gross margins and net profit for your business. Although the jobs might seem pretty dry and boring, and there's times when repetition can get a little bit old, they're essential to keeping your operation running smoothly every single day and keeping you out of serious trouble. We're going to talk about 3 elements that your accounting department or bookkeeping person does that are ones that you really need to focus on as a manager or owner, because they're the ones that will really bury you. And these are the ones that really they should focus on to make sure that they're at the top of their game. The first one is payroll processing. One of the critical areas of bookkeeping that impact everybody directly is payroll. Payroll processing is one of the most important things at work, and it's really more than just that. The payroll processing component of your business not only is a reflection on how well you care, or at least perceived by employees as how well you care about them, but also is one of the few areas of your business, as long as you're in a legal one, where you can end up personally liable or going to jail if you don't do the things right. And normally you hand this off to a bookkeeping person and goes, as long as everybody's getting paid, we're all good. Well, it's a lot more complex than that. So we're going to dive in a little bit more. The process starts with generating accurate paychecks for every employee, which, seems fairly obvious, but can sometimes be a challenge, particularly if you have shift differential pay and overtime pay, time tracking issues, you got folks in the field, travel pay, vacation pay, paid family leave, those kind of elements. It's very difficult to kind of keep all those things straight. And so having a system and someone who's able to understand what the requirements are is critically important. That takes a lot of time and a lot of hours to make sure those calculations are correct. As an employer, that piece is critical. But what is even more critical, what will make your life miserable if it goes wrong, is that payroll and payroll taxes create personal liability for officers and owners. If you fail to pay wages, or if you fail to send the IRS or the state their money that you've withheld for Social Security taxes, for income tax withholding, for Medicare, you can end up not only personally but also criminally liable for those wages and taxes. The bookkeeper ensures that the taxes are deducted from employees' paychecks and paid to the appropriate government agencies, including income tax, Social Security payments, and employment taxes due to state and federal governments. Failure to pay these timely will result in personal liability. And it's called a trust fund violation or a trust fund failure to pay. And those trust fund tax allocations have penalties, have interest, and can attach criminal liability. So if you do nothing else or get nothing else out of this video, remitting your trust fund monies, and because you're considered a trustee for the government in collecting things like withholding taxes, you're the trustee for the government, and then you remit them. If you breach your fiduciary duty as a trustee, you become personally liable. There's a fair bit of work that gets done in tax resolution. So if you do tax resolution work, and I do some of that, where someone gets in trouble with the IRS, sometimes it's, you filled out your taxes wrong, you failed to report this or deduct this. Where the biggest problems come in are trust fund violations, where a business owner, or more likely the bookkeeper or the accountant, failed to send the money over to the IRS because other bills were due. We just didn't have enough money, and so I withheld it from the paychecks, but I used it to pay something else. That's going to end up putting you, not necessarily the bookkeeper, in a bad spot because you're responsible as a trustee, as a business owner, as the officer. For those reasons, a lot of companies outsource payroll processing to companies like QuickBooks, ADP, or Paychecks, where they automatically take the pay, the taxes, and everything else out of your bank account. When a payroll's run, they can't run the payroll unless the money's there, and so you're not going to end up with a trust fund violation. You might end up with a wage problem if you don't have enough money in your account, but you're not going to end up with a trust fund violation because you won't have failed to withhold the money and remit it. So payroll is absolutely critical. I generally recommend to my clients that they look at utilizing QuickBooks, ADP, or Paychecks. Some of the largest companies I've worked at, so I mean we're talking hundreds of employees, we've outsourced payroll to QuickBooks, ADP, or Paychecks. The next one that bookkeepers and accountants do that you need to be focused on as the business owner is cash management. The accounting department of a business records all payments of cash and any cash received from customers and clients. They make sure the money is sourced accurately, reported in the books accurately, deposited in the appropriate accounts, manage where the money's going, and making sure that there's enough money set aside for payroll, taxes, bank loan payments, and vendors, among others. If you have excess money, normally the accounting department will take a look at that excess money and put it somewhere where it can earn you a little bit of interest, whether that's in a sweep account that has interest attached to it, whether that's against a line of credit to reduce your interest payments, and some can also be set aside in what I'll call here a sinking fund, but really a separate account for long-term goals to help grow revenues down the line. So you might have a savings account, business savings account set aside to buy some new equipment or to buy a new building or to expand the business, to do an acquisition. And you may say, hey, of the money that comes in, anything over $100,000 a month, I want to put over here because we're going to use that to expand the business. The accounting department will handle kind of the physical movement of that money and the recording of that movement. The other side of the receivables business, so the money coming in, is the payable side or cash disbursements. A company writes a lot of checks during the course of the year, or does a lot of ACH payments, or does a lot of wires. I mean, you either pay by check or you pay electronically generally. The other thing businesses have started doing, and it's one that I recommend, is utilizing a business credit card. So you go out to your bank, you get your business credit card, you apply for it, and then you are able to do a couple things. One, if there's a fraudulent charge and you're reviewing your credit card charges on a monthly basis, which I also strongly recommend as the business owner, you review all the company credit cards, review all the charges, see if there's anything wacky, you've got the ability to dispute the charge. So unlike when you've got a wire or an ACH or a check where it's darn difficult to put the stop payment on it, particularly after it's already been paid, with a credit card, you've got that 30 days to 60 days of time to dispute your charges. So it gives you a chance to put the brakes on the fraud. If there's fraud or if there's someone stolen the card or things like that, it provides a level of protection. The other thing is a lot of business credit cards have points or miles or rebates or things like that attached to it, which allow you to get the money back. So if you use the cards, you review the card's activity, and you pocket the miles or the rebates, and you pay them off every month, you're in a really good position. You're in a much better position than if you're using checks or ACH or wires. So, I strongly recommend, for a myriad of reasons, to use business credit cards for your business expenses. Having said that, there's some things you can't use business credit cards for, like paying taxes and salaries and some of those kind of things. So, you're going to be buying, purchasing raw materials and supplies and paying salaries, taxes, services, all those various components that are necessary to run your business. Rent. The accounting department prepares all those payments and records to whom they were given and how much were given on each transaction based upon what it's being used for. So if you spend $10 buying office supplies, they're going to debit or say, hey, we spent $10 on office supplies and I'm reducing cash by $10. Or I spent $10 on office supplies and I'm booking a payable to the credit card company for $10. And when it happened, so, if this was on the 12th of the month, they're going to record it as of the 12th. If it was on the 20th, they recorded it on the 20th. So what you'll have in the accounting system is a record of everything you spent and when, why you spent it, so for office supplies, and where it came from, cash. And that's really the accounting department's responsibility to kind of put that entire framework together so that you've got the idea of what you're spending your money on and why, and how much you spent and when. And then the other piece is what money's coming in and why and where it went and when. And so that's kind of the cash management piece. Failure to manage that cash as the business owner can run you out of business. So my recommendation for business owners is on the cash management side. Well, the accounting department is generally running the physical movement of that money and preparing the payments and recording them in the system. As a business owner, you want to be doing two things. One, you want to look at your financial statements every month and make sure that they make sense. And you should learn to get a feel for what your business is doing by the numbers. At least get a gut feel. So when you look at the numbers and you go, this doesn't seem right. We've got, it seems like we've got either too much cash or we've got too much expenses, or, I don't remember spending that kind of money on raw materials. You're able to kind of ask the right questions. The second thing is you should be the one that does the final review of the credit card statements, final review of the bank reconciliations, final signing of all the checks. Don't delegate those things. That's something that's critically important for the business owner to do, to see what money's coming in, what money's going out, and why. And as part of this series, we'll talk about what you should be reviewing in the financial statements, and I'll kind of bring up some and let you take a look at, here's things to look at and here's things to where I tend to focus my time when I'm running the business, and areas where I focus my time when I've been a chief financial officer, and areas where there tends to be problems so that you can look. But for now, early in the, as we're kind of framing up the concepts, think about cash management as one of your most important duties. So we've got payroll and taxes, cash management, and those two are ones that'll run your business out of business really quickly if they're not handled right. The third one to focus on from your, kind of accounting and bookkeeping department is asset and inventory management. Accounting departments keep track of purchase orders placed for inventory, such as products that will be sold to customers and clients. They're responsible for the assets in a business property and equipment, making sure that they're recorded right and that they're depreciated properly. If you screw this stuff up, there's a couple things. You screw this stuff up and things will screw up your taxes. So if you expense things that should be booked as an asset and depreciated, you can get into some tax trouble. If inventory isn't booked right and it's booked as an expense, you can get into some tax trouble. The other thing that I learned when I was a CFO of a major restaurant chain is that there's a theoretical cost associated with everything you do. So if you're selling greeting cards have a margin, and you might expect the margin to be, the gross margin, which would be, I sell a greeting card for $4, I pay $3 for the greeting card, my gross margin on that is 25%. Essentially, I get 4, my cost of goods sold is 3, my profit, my gross margin is $1, which is 25% of $4. If that number is much different from 25%, you may have an inventory problem. So for example, and I'll use a restaurant example, and some of you probably own restaurants or food trucks or other things, and you've got folks who work for you. You should have a theoretical food cost. So if you're selling hamburgers and each bun is 8 cents and each patty is $1 and the condiments are 10 cents a piece, and you've got 2 cents for the wrapper that goes around it, it costs you $1.20 for the hamburger materials, and you sell it for $2. So your theoretical food cost is $1.20 per hamburger. If you sell 100 hamburgers a day, you should have $120 of expenses associated with those hamburgers. If that's $130, that means you might have folks taking hamburger patties out the back door. They might have them giving them away food to friends for free. You might not have people paying. So you're looking at it going, my revenue, at $2 a hamburger, I should be making 80 cents a burger. And, I'm not. I'm making, 45 or 50 cents a burger. What's going on? Those are things that you should be looking at. Your accounting department is recording the inventory, the spend of the inventory, counting the inventory, and you as a business owner need to be watching, one, whether it's accounted right. So whether assets are accounted for as assets and not expensed, whether inventory is accounted for as inventory and not expensed, and if they are what you expect them to be, particularly on cost of goods sold and inventory. The other thing is it's important that, periodically, once a quarter at a minimum, you or somebody who is not involved in the inventory counts it, physically counts it, and goes out to the warehouse, goes to the freezer, goes to whatever, and goes, okay, over the course of the last 30 days or the last quarter, we've bought 10,000 hamburger patties. The accounting system says we sold 9,000, so we should have 1,000 hamburger patties in the freezer. You go out to the freezer and you count the boxes. Do you have 1,000 of them? If you don't, you probably have an inventory problem. Folks took the box of patties home, and you're going to want to address that, or something wasn't recorded right. But that's your inventory management piece, and your accounting department has a critical part to play in inventory management. These three areas, payroll, cash management, and inventory management, are the three areas where you as a business owner are likely to get defrauded. You as a business owner are likely to lose control of your business from a financial perspective. And it's easiest because there's so many fingers in the pie on each one of those, and both outside and inside the business, that it's difficult to control. So what does a bookkeeper do? Well, the bookkeeper keeps the books and records of the normal money in and out. But the three areas that the bookkeeper focuses on that you need to focus on is the payroll, is the cash management, and is the inventory and asset management of the business. If you stay on top of those three things, you're most likely going to catch any problems before they become major ones, and you're going to be able to keep your fingers on the pulse of the business. A lot of times we think about bookkeepers and accountants as just paying the bills. However, payroll, cash flow management, and asset management are three of the most important aspects of the business, and ones that if poorly managed are going to put you into bankruptcy or could put you in jail. So those are ones that just stay on top of. Your ability to hire, train, and retain, as well as oversee your bookkeepers and bookkeeping function, is a key to successful business ownership. Stay tuned for more on tips and tricks for business owners and where to focus your time and effort in order to make sure your business allows you to drive to FI. Until next time.